Hey, good morning, guys. It is Friday, January 27th. This is the last weekend of January. So we are already through January. It's kind of crazy seeing as how I started this channel at the beginning of January. I think January 2nd or 3rd was technically my first post was January 2nd. It didn't get uploaded because of a local internet outage we had until January 3rd. So I've already done almost a full month of videos. I'm still going to have 2 this month on Monday and Tuesday. But it's kind of exciting. So we're in it for sure. So today it is a late posting. It's 9:17 a.m. here in Utah. Had a very late start. Just kind of a busy day for a Friday. I am actually also planning to be up in Bear Lake this weekend. So if you guys are up in Bear Lake, this is again a local channel. I'm doing the Winterfest, so I'll be doing the polar plunge, and then I will be doing the 5K up there as well. I kind of do that one every year. It's my 3rd or 4th year doing it, so it's a lot of fun. So come say hi if you're there. I'm gonna be shaving my beard, have a mustache because I'm doing Omni-Man as my costume. For those that don't know, the Bear Lake Winterfest, the polar plunge you're supposed to do in costume. I almost drowned last year because of my costume, so I made some changes this year, and hopefully it'll be good. So yeah, come say hi. I'll be there all weekend long. I'm going up tonight with my girlfriend and the family, and it'll be a lot of fun. So let's get into it. We're going to talk about inflation. We're going to talk about a bunch of different stuff going on in the market. The market is currently a little bit down, but not by much. Currently, I'm looking at the numbers right now. The Dow is down 25 points. S&P just 1 point. NASDAQ is actually up 29. My favorite metric, gold, is remaining stable. So gold is currently at a spot price of 1924. So it is actually negative a little bit. So I shouldn't say it's remaining stable. Looks like it is a little bit down, but it's still very high. I'm still sticking to my prediction. I guess if it doesn't skyrocket or correct in the next month, I could be wrong, but if it keeps increasing, if it hits 2,000, I think something's coming in February, but we'll see. At the same time, like, just to give you an idea, silver is $23. That's where silver has been for eternity. Copper is at $4, which is a little high. Copper is usually around the $2-3 range, but that's not astronomical. Platinum is only at 1,010, and palladium is down. Palladium is at 1,600. There was back in the day, I remember when palladium prices were very low. They were in the 200-300 range. But I also remember in recent history, within the last few years, it was just in the Obama and Trump administrations where palladium was above 2,000 an ounce. And that was with Russian sanctions, and we're still in the midst of Russian sanctions, and there's more EVs on the market than ever before. There's more new cars on the market than ever before because car sales were so massive in the last couple of years. That number should be much higher. And it's not. Gold is dominating the story. Gold is skyrocketing. Gold is going up. And gold doesn't just go up like that for no reason. Of the two, platinum, palladium, and gold, palladium is used more industrially than anything else. It's used more restoratively than anything else. And it's got the most restrictions right now because the largest palladium mines are in Russia. So there's no reason why palladium should be that low. That's an indicator of something, that gold is that high. But forget my gold rant as usual. Again, I don't own gold. I don't invest in gold. I just think that that's a very powerful indicator. So let's start with Intel. I think that's a very interesting story. So Intel is doing terrible. Intel had one of their worst quarters in history. They posted another quarterly loss. Their first ever quarterly loss in history, I believe, it could be at least within 40 years, was last July. But that was mild compared to this. So Intel saw a decline in sales, profits, gross margin, and even has a negative outlook for the rest of the year. They had a 15-cent per share loss, whereas this time last year they had a $1.13 profit. They are losing a ton of ground to AMD and NVIDIA, something they didn't admit to in the conference call. They kept wanting to blame PC sales and a downturn in the market. I don't think that they're taking into account that AMD and NVIDIA are doing amazing stuff. So a lot of the new technology, a lot of the new AI is running on NVIDIA and AMD, not on Intel. Intel is kind of your old school processor now. A lot of our manufacturing runs on Intel. not by choice, but because that's what the software is based on. It's a manufacturing software. It doesn't go through major innovations. It doesn't need major innovations. It's tried and true. So it all runs on Intel. A lot of standard PCs run on Intel, but high performance now is all with AMD and NVIDIA. If you go out and get an amazing computer today, you're going to be looking for AMD and NVIDIA. You're not going to be looking for Intel. So it's going to be very interesting to see what happens in the next few years, because honestly, Intel is banking on better profits in the coming years with self-driving cars and AI and all this other stuff. But they're not being used for that. If anything, the next couple of years are going to be more difficult because these other companies are going to overtake them in these new sectors and these new divisions that have a lot of innovation and have a lot of demand for powerful processing that Intel just cannot handle. So it's going to be interesting to see where this actually leads to. The other problem is they actually have an overproduction. So they overproduced all these chips, which is great, but in order to move them, they're going to have to slash prices and probably sell them at a loss. So there's going to be more problems in the coming quarters. So Intel is just horrible. The reason I also want to highlight it is I think there's something very interesting going on in the market. Right now, we're saying that the tech sector is going down. And we see things like Microsoft, Intel, Google, a lot of these big cats are coming down. But one of the things we're not talking about is they all seem to be established tech. All established tech, all old school tech is seeing a regression, and rightfully so. But Tesla recorded amazing profits the other day, and that's in the face of rising competition from other EVs. So you've got almost everybody doing EVs now. Nissan, Volkswagen, Ford, Toyota's getting into it. So all the major manufacturers are doing EVs, and Tesla's doing just fine, both locally and internationally. So Tesla is not an old company. A lot of people wouldn't say it's a tech company, but it lists itself as a tech company. Its valuation is based on it as if it was a tech company. And so it's seeing rocket growth. And so that's very interesting that I think this is actually more of a change in the guard than it is any sector being hurt. If you're going in with a lot of these new companies, you're probably going to be doing quite all right, especially if it's a company that's legitimately making good products. I think for too long, tech was a bunch of Silicon Valley BS and companies that shouldn't have had the valuations that they did. Things like Theranos, things like WeWork. I remember hearing about one that was like dog walking, Uber dog walking. So like you would volunteer to be a dog walker for the day. I mean, that's a fine app, but this thing had multi-million-dollar valuations when it was just launched in like one neighborhood in San Francisco. So it's not a new thing, right? Tech goes through these bubbles and waves. I think we're in a regress, but I think that adds efficiency to the market, that we're going to see a tightening and a more efficient product from tech sectors, especially new sectors. AI is going to be huge. There's going to be very interesting stuff that happens with AI in the next couple of years, and amazing tech companies that launch in ways that we never thought, right? We see the creative things that AI can do. That's going to play a lot into a lot of new creative content. So it'll be very interesting to see. And I don't think Intel is going to be part of that picture. I don't think a lot of the old school guard companies are, right? ChatGTP is a direct attack on Google, right? ChatGTP has a much more intuitive search than Google has. So that's a direct threat to GTP. GTP is a direct competition to Google, which is why Microsoft is actually trying to redirect and move heavily into that area. We'll see. They might be able to perform that pivot. But I think a lot of the new startups is where it's actually going to be. Even TikTok, is doing amazingly well simply because they built a better algorithm. TikTok technically isn't social media. Everybody loves to call it social media, but it's really not about networking or chatting with friends, right? That's really just Facebook and Instagram. But Google and YouTube can't compete with TikTok. TikTok has an amazing algorithm they just can't replicate in Silicon Valley. And you can call them Chinese bots, you can call them spy programs. The point is the algorithm works very well, and that's a new tech company. So I think new tech is going to trump a lot of old tech the same way, 30, 40 years ago, companies like Apple and Microsoft took apart established companies like IBM. IBM was a powerhouse. No one could see IBM going anywhere. They invented computer processing as we know it. So the ENIAC was the founding computer of everything. They built it. And then all of a sudden came Microsoft, Apple, and a lot of these new Dell companies. And where's IBM today? I think we're at another inflection point right now with tech, and it's going to be very interesting what companies we talk about in the next 10, 15 years. So that's my little tech rant. In addition, so here's another interesting thing of kicking somebody when they're down. The DOJ has filed antitrust lawsuit against Google. Now, I think part of this is mostly optics. I don't know how much of this is going to come, but I do think it's interesting that right now that tech is down, and especially those big old companies, that the Department of Justice has decided to do something about it. They're claiming that Google, Alphabet, used shady tactics of M&A to squeeze out competition in order to dominate ad sales. It's probably true. I don't know what they're going to be able to do about it. Say what you will, Google is currently one of the most efficient ways to navigate the internet and has been for 20 years. It's actually very interesting. If anyone remembers the show Smallville, I rewatched it last year. That's a show that came out. I think I was in 9th grade when that show launched, because I remember I was the same age as the characters on the show. And in that show, it talks about Google, right? Google is already an established title in 2003, 2002. So Google was already the dominant company then, and it still is today, right? We don't say search for something, we say Google something. So we'll see what happens here in the next little bit of what changes in the next 20 years. Chevron, another company with a monster quarter. I think this was their best quarter on record. Record-breaking revenue of 36.5 billion. So I think this is the largest they have ever had in a single quarter. A little bit surprising seeing how there were lower gas prices here in the last quarter, but still they just dominated it. The big story is, of course, inflation. So PCE, the personal consumer expenditure, excludes energy and food. Exclusion of energy and food rose 4.4 in December, whereas 4.7 in November. So this is an interesting number for inflation. So this isn't CPI. CPI does take consumer data into effect, like food and gas. This really happens to be for more larger expenditures, which for most people is very rare. So usually PCE, is usually more of a measure for businesses than it is for consumers, because those large expenditures just don't really happen in consumer markets as often. So this is interesting that it is down, but I don't think it's a great measure of inflation. I'm going to keep waiting for CPI and see where that leads before making any judgments. Personally, on our business side, we have seen rises again. So all of our materials went up at the beginning of the year drastically, some by as much as 40%. It is more difficult because we are also in a market where we cannot easily raise prices. So it will be, I don't want to say a difficult year, but it is difficult to be able to have the same profit margins that we did last year. And we're looking for alternatives in materials and products and brands, which I'm sure what a lot of people are going to be doing. But we'll see what CPI has in store in the next couple of weeks. This is a good measure, but I don't think it's the full story. That's pretty much all I wanted to cover today. Kind of a longer video, but lots to cover. So I will be up in Bear Lake. Come say hi, 2023 Winterfest. It'll be fun. I hope you guys have an amazing weekend, and I'll see you Monday morning.